The Kiwi regained lost ground and swung back into the positive territory as markets shrugged off the recent New Zealand trade balance data and now shift their attention towards the RBNZ policy decision due on Thursday. With me down the line to discuss is the Head of Global Research and Analysis with JFD Brokers. So the New Zealand dollar remains stuck in consolidation mode below the 0.68 figure against its US namesake. We do have back-to-back monetary policy announcements expected from the respective banks. Are we likely to see any directional conviction for the pair in the meantime?
The country's trade deficit for September widened to 1.22 million, which is the largest in the last year due to increased imports and decreased exports. But it failed to have a significant impact on the currency. However, demand for the New Zealand dollar remained under pressure despite the fact that the Reserve Bank of New Zealand lowered its benchmark interest rate to 2.75% after 3 rate cuts in 2015 by 25 basic points each time. Probably there is two main messages behind the recent rate cuts. That while further easing is likely, as Governor Wheeler said, that further rate cuts are likely but not imminent, thus maybe they will keep their options open in terms of timing, while the second thing is they gave a very clear green light for further weakness in the currency. Therefore, the resulting fall in the New Zealand dollar was helping to support some growth as the economy is growing on a healthy pace since the annual growth rate stabilized above 2% since 2012. Even though the Kiwi remained in a consolidation phase the last couple of weeks, it fell more than 20% since June of 2014, when it peaked at 0.8840, and more than 10% since it second peaked at 0.7740 in April 2015. Now, the disappointing reports, including the U.S. new home sales, which fell by 11.5% last month, and the average of U.S. non-farm payrolls in 2015 that also fell below 200,000, added to speculation that the Federal Reserve will hold off on raising interest rates until well into the 2016. Note that in the last year, the average of the U.S. non-farm payrolls was 260,000. Therefore, Fed rate decision is unlikely to stoke any volatility as the market participants will not be able to collect fresh indications on the timing of an initial rate hike, since the Federal Reserve will announce only the interest rate decision without a monetary policy statement or a press conference.
So, which levels should we consider for US dollar against the Kiwi moving forward?
Since I expect the Fed policy meeting to be a non-event, I will expect the Kiwi to remain below the key resistance level of 0.69, which coincides with the 200 simple moving average on the daily chart. Even though the market expects the Reserve Bank of New Zealand to keep its rates unchanged, I will anticipate the New Zealand dollar to come under further pressure since it failed numerous times to break above the psychological level of 0.69 and to complete the correction phase, which started back in mid-September of 2015, around the 0.60 to 50 area. Therefore, the key levels to watch the downside will be the 0.67 with a break below to prompt a more aggressive move towards the 0.66, which coincides pretty much with the 200 simple moving average on the 4-hour chart.
The RBNZ message should also support Aussie Kiwi gains. Some analysts believe a run-up to the 38.2% fibble level of 110.25 is obtainable this week. But what do you think?
Well, I think the Reserve Bank of New Zealand will not support the AUD-New Zealand dollar pair, and I will expect further New Zealand dollar depreciation. Therefore, the levels to watch there will be the 1.05 and then the 1.03. Note that it's very significant that the pair is moving below the 50 simple moving average, which adds to the bearish picture of the pair.
Mr. Grigoriou, lovely to speak with you. Thank you. Well, that's all from me for the moment, but there's plenty more on the site, so make sure you click back to Dukascopy TV. Bye for now.